So if you're looking for a case study in how a really successful tech platform uses its financial muscle to pull off a pretty bold strategic pivot, this deep dive is definitely for you. We're digging into AppLovin today. They're a huge player in ad tech, and we're looking at their Q3 2025 results.
Right. And our mission today, well, it's really to cut through the noise of the earnings report. We want to get to the bottom of what's driving this, frankly, exceptional growth. And maybe more importantly, figure out what this big push into e-commerce actually means, for their AI platform, Axon, and the whole mobile ad world, really.
And the headlines alone are pretty staggering. I mean, Q3 2025 revenue, $4,405 million. That's a 68% jump year over year.
Yeah, it's massive growth. But the efficiency, that's the really striking part. Adjusted EBITDA hit $11,158 million. That's up 79% year over year.
79%.
And get this, the margin was 82%. 82! I mean, achieving that kind of margin at the scale in tech, it's pretty rare. It just shows how tuned their current model is.
And that efficiency, it translates straight into cash, right? And confidence from the market.
Absolutely. Look at the free cash flow, $1,049 million. That's up 92% compared to last year. They finished the quarter with $1.7 billion just sitting in cash.
Wow.
And that kind of cash hoard, it lets them be aggressive. You see it in the share buybacks. They snapped up 1.3 million shares in Q3. Cost them $571 million.
$171 million in one quarter. And then they actually increased the total buyback authorization right after that.
They did, yeah. Bumped the remaining authorization up to a massive $3.3 billion by the end of October. It's basically them shouting from the rooftops, we think our stock is undervalued and our model is solid.
Yeah, that's a serious signal.
And their guidance for Q4 backs it up. They're projecting revenue around $1.57 to $1.6 billion. And adjusted EBITDA, somewhere between $1.29 and $1.32 billion. Still keeping those super high margins like 82, 83%.
Okay, so they've got this incredible cash pile. Right, and these crazy margins. That kind of financial power, it obviously lets them take some big swings, like jumping into a whole new area. How exactly are they making this move into e-commerce? Opening up their platform, the Axon Ads Manager.
Well, it's very deliberate. They are opening it up to shops, to e-commerce advertisers, but they're not just throwing the doors wide open all at once.
Oh, how so?
Right now, new customers are basically coming in through referrals only. They're kind of filtering, making sure they get the right type of advertisers first. It's not like open season for your local dry cleaner just yet.
Interesting. But isn't deliberately slowing things down a bit counterintuitive? Especially when you're trying to break into a massive market like e-commerce against giants.
It does seem like a constraint, yeah, but I think it's strategic. They want to build the foundation properly first. The onboarding itself, it's actually pretty complex. It's not some, plug-and-play thing.
Right. Advertisers have to integrate those tracking things, the pixels, they call them.
Exactly. That's the key. They need their tracking code on the shop's website to actually see what users are doing, what they're buying, what they're browsing. And getting all that set up and the campaign actually running takes over a week usually. So there's built-in friction, but it seems like it's by design to ensure good data comes in from the start.
Okay, so there's that technical setup friction.
Yeah.
But you mentioned another hurdle, something about the actual ad content, the creative.
Yeah, this is a huge one they called out. A major bottleneck, actually. These new e-commerce folks, they often just try to reuse the short ads they run on social media, the ones you scroll past. Average view time there is maybe, 7 seconds?
Okay.
But AppLovin's platform, the places their ads show up, like in games, the average view time there is much longer, closer to 35 seconds.
Well, wait, 7 seconds versus 35 seconds? That's a massive mismatch in how people are expected to engage.
It is. It's like 5 times longer. So a quick little social ad just doesn't work well. It won't convert nearly as effectively when it's shown in a spot designed for longer attention spans. And this creative gap, as they call it, is something the advertisers themselves have to fix right now manually, which, slows things down quite a bit.
So they're willing to put up with that friction, both the technical setup and this creative headache, because why? What's the payoff for AppLovin?
Because it helps solve a different problem. A problem in their main business, mobile gaming ads, which is essentially wasted impression.
Wasted impressions. How so? Their gaming ads are super effective, right? That's where the money comes from.
They are. When the AI knows a user is likely to install a game and spend money, they get phenomenal CPMs then. But think about it. How often is any given user really ready to download and spend a new game right now? Based on how these models work, they're probably wasting 80% to 90% of those impressions showing game ads to people who just aren't going to convert at that moment.
80 to 90%.
Wow.
Okay, so that's a ton of ad space, essentially excess capacity that isn't making them top dollar.
Exactly. It's inventory they need to monetize better. And that's where the e-commerce demand comes in. It gives the AI something else to show those users.
Ah, I see. So bringing in this different kind of demand, the shops, lets the AI make better use of all the impressions, not just the ones perfect for games.
That's the core idea. That's the synergy they're banking on. If the Axon AI figures out, okay, this user isn't downloading a game right now, maybe it thinks, but perhaps they'd be interested in buying, I don't know, these shoes. It uses that excess impression more effectively.
And there was that really specific example they gave about how the e-commerce data feeds back into the gaming side.
Right, the CEO mentioned this. Let's say they get a new data point, something like this specific user just bought a $5,000 handbag on some website.
Okay, high-end purchase.
Exactly, a signal they just didn't have access to a year ago. Now, that information flows directly into Axon AI, and that signal, that purchase behavior, might tell the AI, hey, this person, they might actually be a really valuable player for Candy Crush or some other game where high spenders are key, even if they've never played it before.
Because it signals disposable income or maybe certain spending habits?
Precisely. It adds this whole new dimension of data, this diversity, that makes the AI much smarter at predicting value across the board, even for its original gaming clients.
That's actually pretty profound. They're kind of leveraging their dominance in gaming ads to bootstrap a much broader, almost universal advertising AI.
That seems to be the ambition, yes. And remember that creative friction, the 35-second problem, they're working on that too, very actively. They mentioned hoping to start testing generative AI-based creative soon, like in weeks or months.
So the AI would actually make the ads, longer ads, optimized for their platform.
That's the goal. Imagine the AI automatically creating different ad versions, maybe longer ones, better suited for the 35-second view time, specifically for these e-commerce clients. That could potentially just erase that big adoption hurdle.
And what about just basic quality control? Are people actually checking all these new ads and websites coming in?
No, not manually. They made it clear bots are handling that. When an advertiser uploads creative or links their website, it's bots that automatically scan everything, checking for quality standards, making sure it's legit before it goes live. It has to be automated at their scale.
Okay, makes sense. So connecting this pivot back to the broader market, why now? What's happening in the ecosystem?
Well, a key point they raised is that the in-app advertising market, it's growing way faster, multiples faster than the market for in-app purchases.
Right, because the in-app purchase market is more mature, maybe more saturated, and it's got that big drag from the platform fees, right? The 30% cut the app stores take.
Exactly that. That 30% tax really constrains growth on the purchase side. So advertising just has more headroom, more potential for scale right now, which is where AppLovin lives, especially with their Max mediation platform.
Okay. And globally, they're being selective about where they roll out this e-commerce stuff initially.
Yeah. For now, web and shop advertisers are allowed pretty much everywhere except for traffic in the EU.
Ah, Europe. GDPR complexity, I assume?
That's the reason they gave. The EU is, a relatively small part of their business overall, maybe low teens percentage-wise. And dealing with GDPR for this new type of advertiser would require a significant specific build-out. So the priority seems to be getting the platform working globally first and maybe tackling the EU specifics later.
And their philosophy is basically that the AI can handle different regions because behavior is universal.
Kind of, yeah. They use the phrase math is universal. The underlying idea seems to be that while the specific shops might be local, the fundamental users signal the AI looks for engagement patterns, spending power, those translate across cultures. Plus, they think things like language localization are getting much easier thanks to, large language models, LLMs.
Right. Okay, before we get to the wrap-up, we should probably touch on some of the other corporate stuff happening. There was litigation mentioned, the TikTok interest, and a write-off.
Yeah, good points. Important context.
Right.
First, just housekeeping. They sold their internal apps business back in June 2025, so that's now treated as discontinued operations in the financials. Second, yes, there's ongoing litigation. They're involved in securities and shareholder derivative suits.
Can you break that down? What does that mean for us?
Basically, some shareholders are suing, alleging that the company made misleading statements in the past about its advertising tech or its growth trajectory. An updated complaint was filed in September, so this is an active legal issue they have to deal with. It takes time, attention, resources.
Got it. And then the TikTok thing. That seemed to come out of left field.
It did raise eyebrows. They publicly stated they provided an indication of interest to the U.S. president about potentially exploring a purchase of TikTok's operations outside of China.
Wow. Buying TikTok. That feels like a massive, maybe even risky ambition for them, especially with litigation ongoing. How real is that?
It's described as very preliminary, highly complex, huge risks involved regulatory, political, financial. I think it mainly signals their immense ambition and maybe a desire to use that big cash pile for something truly transformative. But yeah, the hurdles are enormous. It shows they're thinking way beyond just tweaking their current platform.
Okay. And finally, that impairment charge.
Yeah.
The $50 million loss.
Right. That was a full write-down of their investment in a company called Humans, Inc. They developed the Flip Shop app, which is like a social shopping thing.
So they invested, and now the investment is worth zero. Is that a big deal or just a blip?
Well, it's a $50 million loss because Humans, Inc.'s financial situation apparently deteriorated badly. For a company generating over $1 billion in free cash flow per quarter, $50 million is easily absorbed, financially speaking. But it does highlight a risk, right? Their strategy involves investing in other companies in their ecosystem, and sometimes those bets don't pay off. It shows they're exposed to failures outside their core ad tech competence.
Okay, so let's pull this all together. We've seen this incredible financial engine. Amazing discipline, generating massive cash flow. And they're using that strength to fund this huge strategic bet, moving into e-commerce, bringing diverse demand onto their platform, all to make their Axon AI this kind of universal brain for monetizing any ad impression, not just gaming ones.
That's the core narrative, exactly. But what's so interesting, and maybe the crucial point for you listening, is that the success of this whole grand strategy, it really hinges on them solving that 35-second ad creative mismatch for the new e-commerce clients.
Right, that bottleneck we talked about.
Precisely. They expect to start testing generative AI for creative in just weeks or months. So the big question you have to consider is this. Will those new AI tools actually work? Will they be able to generate good quality longer ads automatically at the scale needed? Or will that friction around creating unique longer ads remain the main thing slowing down their big global expansion plans? That feels like the key thing to watch.